Good afternoon, everybody. This is Dennis with the Active Trend Traders for the Aftermarket Monday, but today we're doing it on Tuesday since yesterday was the Labor Day for 2017. If you just missed it, we just did a real quick stock review on a couple of stocks that Eric was looking at. He's a premium member, and I just want to remind premium members, if you have a stock you want me to take a look at, you can always email me. I try to get through those on a daily basis and get at least a comment back to you on what I'm seeing when I'm looking at the charts. I want to remind everybody that all the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. I have really become more and more enthralled with the concept of seasonality and how it helps a person be patient and wait for the big moves in the market. We are coming up into a period of the year, September, October. September tends to be the worst performing month of the year, but then it is followed by typically September is the pullback month into the potential setups in October that then launch us into the rest of the year. That's what we're looking at for to happen this year. So remember, seasonality gets us in the ballpark, but our technicals get us into the ball game. Our objective of Aftermarket Monday is one, timely actionable intel at the beginning of each week. So you can be standing by. Market review, real quick market review, stock ETF setting up, what else and where to focus. Now, of course, the actual triggers for anything we discussed today are only provided to the premium members, and we do that by either text message and a email alert. The email gives the rest of the setup along with the stop losses and all that kind of stuff. So have patience, stand back, and respect the system. Okay, here's what I'm looking at. At this particular time, with the weakness we saw in the market today, have we come into a time of the year when we should be selling into the strength? We'll take a look at the charts to see what we think about that. But we're talking about September 5th and beyond. Seasonal expectations. September's expectations are basically pullbacks for October setups. Does this mean that we won't get a turnaround in September on some of the stronger growth stocks that we're watching? Sure, that is always, there's always that, early adapter that jumps on the bandwagon first. We're going to take a look at FAS and UCO. FAS, we thought that was setting up, we did our review over the weekend, and bam, it gets whacked today. That's the financials. And I'm still liking Netflix, NVDA, YY, Tesla, Cruise, and LGIH. Netflix, NVDA, and Tesla as the regular stocks we watch, YY, Cruise, and LGIH as the floaters, those stocks on the IBD 50 that have floated to the surface and for us. Eric, I think Cruise may have fallen off the IBD 50, but it's still on the trail on the other list that we track, which is the running list. Yeah, so, okay. Last week, and I've shared this, and so this is one of the reasons why I'm starting to put out this table at the end of, before the beginning of each week with what is called the early or on the radar report that I send out to premium members. This week, we provided this out to anybody who wanted to take a look at it. So all you had to do was go over to the Active Trend Trading website, which is, let me show it to you real quick. And I made this, like I said, available to everybody who wants to take a look at it, and it is basically right here under the blog section of the website. So if you want to take a look at what's involved with this in this video, please take a look at that. You know, anybody can take a look at that to see what I'm looking at for this week. But ideally, what we want to be looking at as of Saturday, you know, the weekend review, XLF was setting up, had a Y, to be looking for that. Now, of course, and what this is intended to do is give premium members an opportunity to say, okay, just in case I don't pull the trigger on some of these, at least you have got another step up so that you can be ready to go ahead and get into a trade if it meets the active trend trading rules. So we had basically nothing other than XLF, USO, and LGIH with a potential entry around the 43.80 level. But we expect you to look at those and say, okay, that's all well and good, and on the that's all well and good. But the ultimate, you know, call based on active trend trading rules would be in your ballpark also. And then if I do in fact trade, the text alerts and the email alerts will go out saying, hey, here's my orders, here's what I'm trading. So and remember, all these up here, the spiders through USO, these 7 ETFs will be looking at the 3-time leveraged ETF for each one of those. So I hope that was a benefit for everybody who reviewed that this weekend. So let's take a real quick look at some entities to see what's going on. Okay. SPX real quick. We basically on Friday got all the way up to its resistance at the 24.80 level, and get well, not quite an evening star, but it's really close to it. This wasn't really quite a shooting star, but it's really close to that. What happened? It sold off really hard due to the North Korea issues, and we get a TSI actually starting to roll over, may crack to fall more. When this happens, okay, I'm not going to be in a hurry because we know because we've been following this for quite some time, when is the best time for potential entry into SPX? Well, we know that it's when the TSI gets down and the momentum get down here towards the bottom. You get these double bottoms with the market forecast, at least on 2 of the lines. And we know that those areas are when it's the best time. We look at what's been going on here when we do get rollovers in the past time. And what happened? We basically hit a high and we rolled over. Now, of course, we don't know how far it's going to fall down here. This one fell all the way to 100, but we know that we're going to be patient and wait for that TSI tick up, and sometimes it's the second TSI tick up with a positive divergence that actually turns out to be the better of the two. And so, like I said, now we got a big sell-off down to the 50. Again, this reaction down to the 50 will be banging on the 50 to try to drive it over so that we may get the TSI, the 50-day moving average rolling back over. Same thing. It looks like what we got on a weekly chart, and I'll blow this up just a little bit, is basically just a TSI squeeze from last week, and now it's starting to roll back over. So in reality, we've got to take a look here and say, okay, this may be continuing to head down. Momentum's not all that high. And so in the very near future, I'm going to be doing a presentation for the premium members on utilizing the TSI and the momentum, but especially the TSI, to predict when to expect a potential turnaround in the on the price action for a particular entity. I think you'll find it very interesting because it ties right into some of the things we did with symmetry. NASDAQ. NASDAQ, similar type action, got up just a little bit past its breakout, broke out actually on Friday, but didn't close above the breakout, sold off, and then sold off again today. Now this is a little bit stronger. It is above the 850, the 820 combo, and clearly above the 50. So price action, did push back up, but the TSI started to tip over. Now we'll see if it crosses, and if we get a close below the 8, that typically means that we got a high probability of at least going to the 50, and we'll look across here. Where is the next level of support? We've got two levels down here at 5,800 and down here at about 57.52. Russell. Now Russell, really nice move down. Russell, taking the track from high in July to the low in August. We had a 618 retracement, and it backed off of that today. And so this was a really nice, strong move. But we've got a TSI tick down, squeeze over here on the weekly, and basically what we'd be looking for is, because price action did move above the 50, above the 8, above the 20. Watch those levels, and they also coincide with the 200 and the 100 and this 38.2 retracement. Watch those levels for a potential. That's where we could get a rebound, but of course it could just pull all the way back down to about the down here to about the 1380 level for a rebound back up. And I'd be watching, of course, TNA. Going into the end of the year, I like TNA and I like TQQ, but we don't have a signal right now. Is the TSI rollover a sell signal? It's not necessarily, well, when you mean a sell signal, it can mean a sell signal just to lighten up on your long positions, Dorothy. I would not utilize it by itself for a short signal. In other words, to sell things short. I would wait until I received a negative divergence to move on from there. Okay. Does that help? Whole green? Yeah. I mean, again, if you get a situation like this, we get a TSI rollover from Friday. You get a red candle closing below the green hole. You could definitely say, I'm going to go ahead and you could take that as a short, going short signal, because this is a large candle today. But where is it closing? It's closing right at support. But you could say, okay, if you were long TNA, you can say, I'm going to take that as my signal to exit my long position and just take my profits. Am I going to short TNA? I'm not going to short TNA, but what I may look at is, do I want to buy? Oops, IWM, there we go. Do I want to take this opportunity to, for a potential setup for I would play the puts on IWM. Does that make sense? Okay, moving right along. I want to throw up real quick the LGIH. This was a very interesting chart, and I talked about it just a little bit when I sent out the email on this last week. I mean, this is an excellent move from the lower Keltner. You get some spinning top dojis, you get a TSI tick up, you get a hammer. Then we get a breakout. Now this is basically broken out above this level, and what did it do today? It came back and tested against the breakout level. Now it's holding up here just above the 50 period moving average on the intraday, which equivalates to the 8-day moving average. You can see the 8-day here is in about 43, and the 50 is about 43.23. So it's not quite exact, but it's within the within the ballpark. Now we're going to get a rebound because this is a bearish reversal signal, a bearish harami, a big bearish harami, and so I'm looking at where would I like where would it become really interesting for a potential bounce? Well, if it gets all the way down to the 50 and breaks back up through, that would be a good place. Again, I'm looking at the TSI, and I have to be aware that this zero line here, even on an intraday chart, could be the level where it bounces to move higher. The TSI just turned over 1 to 3 days ago. Strong positive volume. The only negative on this is, or one of the negatives on this, is the longer term weekly chart. The TSI is pointing down. If I were to take this trend, this slope here, project it down to where it tends to turn around, which is about the negative 25 level, that could tell us that we could be in a a continued downtrend, or it wouldn't restart its uptrend until the 23rd of October. Why is that interesting to us? Well, 23rd of October is when we anticipate around that time frame for the end of year trades to start happening. So we want to really keep our eye on LGIH, because from LGIH, from where it's at right now, if it just gets back up to its past high, you're talking about a 14% gain, which would be anticipated to happen prior to the end of the year. So I wanted to share that with you. Let's take a real quick look at Nugget. Nugget is moving, continuing to move higher. I'm trying to time this to get in off a Nugget and or GDX off of the pullback trigger which would be back to the 8 or back to the 20, but it's really caught a bid and is jumping, definitely jumping out. GDIX has a target up here somewhere between the 28 and the 30, or even a little bit higher, the 31 or 32 on the same thing. Nugget has a target up here around somewhere between 54.73 and up here at the $60 level. So that's still a nice move on Nugget. It'd be nice to get a better pullback, and right now it's just not happening. If I'm, and so I'm watching the 1 hour chart, and right now it's just totally respecting either the 820 on the 1 hour chart. And as you can see, and so that may be what our trigger is to go in for a Nugget trade. Nugget XLF, just real quick. As you can see, XLF went the way of the rest of the market, even harder. It was looking pretty good. We had a nice positive divergence happening with a nice move up. But the shooting star that we got on Friday was basically fulfilled to the downside, and we undercut that low. So I would say, if you're looking at FAS, F-A-S, you maybe want to be looking at F-A-Z, because it may be, lining up to continue to rally if there is weakness, and there's weakness through the month of September. And then USO. Oil got a bid today. However, look at it. It jumped up there, puts in a shooting star after a gap up. That's typically not a strong side, but the volume's starting to pick up a little bit, and so we'd be looking at UCO, which is a 3-time leverage. And again, from where it's at right now, since we did get the gap up, and it didn't break above, it broke above but didn't finish above this level at 1623. Just watch for a pullback into the 820.50 level, which is about the 15, let's say around the 1568 level, which is right about this past high. If we get a pullback into that area or into this gap, wait for the 1 hour chart to show a TSI in the oversold condition and to move up. And that's, again, with the thought that with conflict conflict out there globally, oil could be driven up. Again, getting a real nice reset. It had broken out. It came down. We highlighted this 330 level. It came down to that today and then has rebounded off that. However, TSI is looking like on the longer term that it wants to roll over. It has not crossed yet, but of course this lines up with LABU, which is what we would trade in its stead. And, because this is a $5 move. And so that's excellent. And so, okay, that basically is the things I'm looking at today. And as you can see, there are, just go back and please review the video that I did on the radar. And it'll give you a flavor for, okay, here's what the expectations are. Again, September tends to be a really poorly performing month. It's usually down for the month. And so will there be trades in September to the upside? Yes. But we're going to have to be very selective on when they come and just really, really, keen focus on making sure that we grab hold of the bounce that happens in the October timeframe to ride that through to the end of the year. Because for some of us, that will make our year. For folks who've been just not trading or just new to coming into the active trend trading system, that move that's anticipated from October through the end of the year, that historically happens on a yearly basis, it tends to be of enough significance where it could really help a person's portfolio grow. And Eric asked, what is the inverse ETF for the insurance industry? I haven't got a clue, Eric. Once I kind of lock down my my watch list, I'm very satisfied with just staying with it. It gives me more than enough to watch, and so I don't know. But it's something that you can Google. Anyway, okay, that's it. Ran a little bit long today, but I wanted to get that everything covered so that you'd be ready for be ready for either more downside, which it looks like the market could provide us some more downside. But any kind of good news out there, the market is also hair triggered to want to go into the buy mode. So with that, I bid you adieu. God bless everybody. Bye-bye.